Hi, and welcome to Market Week in Review for the week ending January 26th. My name is Elizabeth Jackson, and I'm joined today by my colleague, Director of Investment Strategist, Shay Kshatriya. Shay, welcome to Market Week in Review.
Hi, how are you, Elizabeth?
Doing good. Excited to talk about this week. I hear there's been a lot of movement and announcements from the central banks around the world. Why don't we start in North America here with our neighbors north in Canada?
Yeah, for sure. It has been a busy week in central bank land, but a lot of talk, but not a lot of action, I think. So we did have the BOC, as you noted, as well as the ECB, the European Central Bank, as well as the Bank of Japan. And what's interesting is that, again, lots of discussions, but no changes at the end of the day as it relates to their policy decisions. So all three central banks kept their policy rates unchanged. Now, there are some interesting similarities between the ECB as well as the BOC in particular. So both central banks indicated that they're done hiking rates, which is great. But the message for the markets was just don't be too quick to price in rate cuts just yet. Now, there's a couple of things that both central banks are concerned with. One, that are worth indicating. One is the stickiness of inflation, and particularly core inflation. It's still above target, and what they'd like to see is that core inflation rate move down sustainably towards their 2% target. So it's just not there yet, and that's something that they want to downshift a little bit more. But also wage growth, they believe, is a little bit too elevated and inconsistent with the 2% inflation target for both central banks. Now, the interesting bit is around the timing. As I said, the markets are anticipating, rate cuts to occur at some point around spring, but it seems like the central banks are trying to push back on that. But at the end of the day, the timing might not be as certain, but we do believe that eventually in 2024, we will be seeing some rate cuts from both of these central banks. Now, the Bank of Japan, it's a little bit more interesting in the sense that it's been the most patient central bank, clearly. And what the markets are really concerned about as it relates to the BOJ is not rate cuts, of course. They've been at minus 0.1% for many years now. What the markets are really trying to get a better sense of is, well, when will the Bank of Japan be actually raising its target rates? At this point in time, the markets have priced roughly around the second quarter as when the BOJ lifts off. But we think that there's a chance that the markets could be disappointed on that front. And it's for a couple of reasons. One is we believe that based on the updated inflation expectations from the Bank of Japan, they expect inflation to be around 2% over the next couple of years. 2% is not all that threatening, and quite frankly, it would be welcomed by the BOJ since Japan has been dealing with deflation for such a long time. But the other point is what other central banks are doing. As we just noted, the ECB and as well as the BOC are likely to cut rates at some point later in 2024. But it's not just those two central banks, of course, the Fed as well. So if other key developed market central banks are actually cutting rates, somewhere around mid-year this year, then the Bank of Japan just may not have the urgency to be hiking at that point in time. So there could be a little bit of a disappointment for the markets in terms of the timing of the BOJ policy change. But at the end of the day, all three central banks, again, lots of talks, lots of discussions, but no policy changes were announced.
Yeah, interesting. As you said, not a lot of action, but a lot of implications going on there. Rounding out our topics today, we've seen equity markets rise this week, continuing a trend that we've seen for 2024 so far. What are the main drivers behind this trend?
Yeah, sure. It's been an interesting story, particularly for U.S. equities, where we've seen U.S. equities have a pretty strong start to this year, in comparison to Chinese equities, and even broader international markets have struggled a little bit more. I think the big picture story for the U.S. is that the U.S. economy is showing some signs of strength. We've seen the PMI data that came out this week, which is generally on the positive side with both the manufacturing and the services sectors, PMI improving. We saw the information released for GDP for last year, which was also better than expected. So we had a nice handoff from 2023 into 2024. And so far, some of the indicators that we're seeing for 2024 also look pretty healthy. And then the final point is, of course, on the Federal Reserves themselves. The Fed and the pivot or messaging, rate cuts coming at some point soon in 2024 has also been positive for the markets overall. So I think it's a confluence of reasons of, what the Fed has communicated, as well as decent macroeconomic data, which is generally supportive of perhaps the U.S. economy achieving a soft landing, which would clearly be a positive if that was to occur.
Interesting. Thanks for providing your insights, Shay. We appreciate your expertise. And that's Market Week in Review for the week ending January 26th. We'll see you next week.
Hi, I'm Eric Risteman, Chief Investment Strategist for Russell Investments. If you like what you saw in this video and want to see more like it, please subscribe to our YouTube channel.